Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you today. I didn't get one done yesterday. It was kind of a busy day, and I spent a lot of the day arguing with Kraken over some issues I had. Their site actually went down for me for about a 3-minute period right in the middle of a dump, and I wasn't able to close the position. Ended up losing a bunch of money. Lost about 5%. On the trade. Thankfully, the trade itself was only about 10% of my portfolio, so all in all, it was, a bad day, and they offered to credit me $150 in fees because of the error, which was not even close to the amount of money I lost. So I won't be trading on Kraken anymore unless they, do something about the loss that I incurred. So that's kind of how I spent my day yesterday. I was going back and forth with them, and I gave them plenty of opportunity to do the right thing. I'm spending about anywhere from $750 to $1,000 a week right now on Kraken's fees. So I kind of felt like they should be willing to credit back the loss, since I was able to provide proof that the site was down during the dump. And again, they offered $150, so it's just ridiculous. So that's kind of how I spent yesterday. I didn't do much trading. I was just trying to get something done about that. So the market itself, it's tough to say what's going on right now. I still am bearish, but there's something that concerns me a great deal about being bearish right now, and it's actually the fear index. Let's take a look at that real quick. So when I look at the charts, things really haven't changed a whole lot for me, but when I look at this concerns me. With fear being all the way down to a 5, that's actually the lowest it's ever been since this chart actually started. This chart actually goes back to February of 2018, so we really don't know how low it got during the actual crash in January of 2018 or in December of 2017. But this is the lowest it's been in recorded history on this particular index. So typically when fear is at an all-time high like that, that would be a bullish sign to me. That would almost be a reversal signal. So that concerns me a little bit as a bear. But when I look at the charts themselves, I'm still seeing the same picture. This is actually a weekly chart of the total market cap. I'm still waiting to see if this head and shoulders comes to be. So we did dip down under the 23 fib this week, but we have pumped back up, so we're back above it. So it could be that that was a bear trap. Don't really know yet. Still waiting for confirmation there. When I look over at the Bitcoin chart, it's the same story. When I look at the 3-day chart, I'm still waiting for confirmation of this head and shoulders as well. Of course, if we get confirmation on this one and Bitcoin starts to dump, it's a good possibility that it will also pull down the total market cap, and that will confirm as well. But this is what I'm watching. So if we draw this way down here, that's the conservative way to go about it. We need this to actually close under, really 9,900 would make me feel good. Maybe even 9,800 would make me feel a little better. So I'm watching that. We did slip under it. You can see right here, but again, we just popped right back above it. So still no confirmation on our head and shoulders. But when I look at the chart, when I look at, like, for example, a 4-hour chart. So when I look at the 4-hour chart, to me, this just looks, like it's basically a dead cat bounce. Okay, we dumped all the way down to 9,700-ish. It's about $1,000 dump, happened very, very quickly over the course of about 24 hours. So it's not unusual at all to get a pump. I actually thought we would pump to 10.5 yesterday. We didn't, which was kind of a surprise. I didn't go long or anything, but I was waiting to enter a short position. I thought we might come back up here and test these levels up in this area. And the reason I thought that was because if we take a look at our 200 moving average on our Bitcoin chart, our 200 moving average is up here around 10.5. So I thought we'd go up and retest that. Hasn't happened yet. In fact, when I drew the Fibonacci levels from the top of this move at 10.9 down to 97.59, it looks like we just got rejected, on the 38.2 fib right here. We slipped above it and came back up, retested it in this candle here. This candle opened about an hour ago, came up, retested it, and now it looks like we're going down. So I would have expected a little bit more of a bounce. That actually kind of bummed me out, even as a bear, because I went short at 10.2 yesterday, and I closed that position during this dump. And I thought, I'll just wait for a bounce to 10.5, and then I'll reopen a short. And the reason 10.5, again, it lines up with this 200 moving average on the 4-hour. It also lines up with the 61.8 fib, which by now, if you watch my videos, you know I'm a huge fan of that area, which is called the golden ratio. Okay, so I wanted to go short up here on a swing trade, but we haven't made it to that level. I don't really feel good about going short down here, other than maybe on a day trade, because you know there's just too much chance that it's going to come down and take a big bounce off of that. So, you know, kind of bummed me out. I didn't get to trade today. I just kind of been watching the market, which is really boring. And it's when traders get in trouble when there's no trades to take, and you start trying to gamble. Well, this might be this, or well, this might be that. Next thing you know, you're entering a trade with no real setup, and you know it quickly turns into a nightmare when you do things that way. So I'm just waiting and going to see how this thing plays out. If you see this big yellow line here, if I go to a daily chart, that's actually the long-term trend. That's the trend that started back really on June 6th. So it's about 2.5 months now that we've respected that trend line. We came down and tested it in late July, slipped through it in mid-August, and now we've bounced off of it last week, and not last week, yesterday, sorry. It's a daily chart, not weekly. And then we slipped through it today, but it's been respected. So, it's tough to say what's going on there. If we go over to a weekly chart, well, actually, before we do that, let's look at the 50 moving average. Our 50 moving average on a daily is way up here at 10.738. So again, still very bearish. If somehow we were able to break through that 10.5 level and we went up all the way to 10.7, I would definitely be very excited as a bear to look for a short. Doesn't mean I'd go short for sure, but I would be looking for a short. But I'll be going short probably around 10.5 if we can get some kind of pump. If we look over at the weekly chart, a couple of interesting things to notice. Well, I'm totally drawing a blank on what I was going to say. No idea what I was going to say. So we'll just take a look at MACD. This is not something that I trade on a regular basis, but I did see people talking about this on Twitter. And it was interesting what they pointed out. They were pointing out that we're about to have a bear cross here, and that the last time we had one was in January of 2018, which of course kicked off the bear market. I don't know if I agree with that though. To me, this kind of looks like a cross right here, and that was toward the end of the bear market. So it's probably up for debate a little bit. I'm not really a MACD trader, so I don't know exactly how that works. To me it looks like a cross, but maybe they got a cross more like this. Don't really know. I don't like MACD. The only thing I use MACD for is I'll use it for divergences, and when I use it, I turn all that crap off. I just have it like this. I'm just looking for divergences in the histogram. But if you are a MACD trader and you know how that works, feel free to leave a comment. I'd be curious. I do find it interesting that this crossover was the beginning of the bear market, and this maybe crossover was the end of the bear market. So I don't think this is a bullish signal. It definitely looks pretty bearish to me. But again, it's not actually crossed yet. We still have some room there. The blue line is at 1405. The orange line is at 1366. So there have been cases in the past where it starts to come together and then kind of, just grind sideways. That's what we had right through here, all the way from August of last year all the way through November, just kind of ground sideways. This looks like a much steeper angle, though. It does, resemble this a whole lot more than it does this. So that's something to keep an eye on. And on the Fibonacci levels and all that kind of stuff, they don't change. They're the same levels I've been watching all along. I'm still waiting to see if we can drop down to the 61.8 fib on the big level. Even if you draw it from here, it's going to be down around 7,300, 7,400. And I really like to see the wick off pattern and the three peaks pattern play out, where we go all the way down to like 4,400 down in this area. That'd be pretty awesome. Also on the weekly, don't forget, we still have this potential M. Okay, so this really, for me, for this to confirm, what I'm looking for is a break underneath 9,100. So, if we break under 9,100, I think, and I could be totally wrong, I would assume there's going to be a lot of stop losses placed just under that, because not only has that been acting as support for the last couple of months, but you can see that actually was an old high toward the end of May. So I would imagine there's going to be a whole bunch of stop loss orders sitting down around this $9,000 area. And if we break underneath that and all those stop losses start to trigger, that's the type of event that we'd see a big cascading red candle, right? You might see a $500 or even $1,000 candle in a 5-minute window. One of those big 5-minute candles where it just drops $500 or $1,000. So if you are a trader and you're thinking about going long on that support level, I would be very, very careful and make sure you have your stop loss put in there. That's actually what happened to me the other day on Kraken. I normally don't put a stop loss in unless I'm going to be away from my desk, and I'll use a manual stop loss. So basically what I'll do is I'll enter a trade, and then I'll put my profit order in, and then I'll just watch it manually. And the reason I do it that way is because on a 5-minute chart, if you're watching it manually, you don't get stopped out by a wick. Okay, so a lot of times you can watch it and wait for the candle to close, and then if it closes under the stop loss, okay, you close the order for a loss and move on to the next trade. Well, what happened the other night on Kraken, I was actually short up here, and then I closed it. I made a mistake, and I closed it right over in this area because I thought we were going to get a bounce off of this support. So I closed it, and then we went down further. Well, right in here, I actually went long. I had a reason to go long. One of my setups actually did come in. It's a setup that I learned from a professional stock guy. It works really well, but nothing's 100%. So I went long here, and I started to get nervous in this area. So I actually tried to close part of the position, and I ended up getting an error. So next thing I know, when I get these errors on Kraken, it happens all the time. I usually just refresh the site, and it's not a big deal. It's more of a nuisance than anything else. When I refreshed the site, it just disappeared. All I got was a blank white page that said waiting on Kraken. And in fact, I'll show you just so you know I'm not pulling your leg. You've got to take responsibility for all your trades, and losses are a trader's fault. No matter what, it's always your fault. Even in this case, with me losing money, I've got to take some responsibility and say, well, if I had put a stop loss in, that wouldn't have happened. But that being said, you should be able to trust the sites that you're trading on. I mean, after all, these are multi-million-dollar companies. You'd think they'd have their stuff together. But unfortunately, that wasn't the case. This is actually what I got. You can see the little spinning wheel up here, and you can see price had fallen to 10.4 while I was trying to close my position. Now, my stop loss was 10.550. That's where I had planned on clicking the close position button at. It moved so fast that I probably would have actually, it's a market close, so it probably been like 10.5. So at this point, it was another $100 down per Bitcoin. Well, by the time it actually came up and I could get back on the site, I actually lost. My average cost on my Bitcoin to go long was 10.606, and I actually ended up closing the position down around 10.2. So I lost over $400 per Bitcoin, and altogether, it was a 4-figure loss because I couldn't close my position. And it all happened in this one candle, really. This candle took it down to 10.356, right? So it was bad. It was real bad. And like I said, Kraken, when I sent them the screenshot and told them what happened, they offered me $150. Hey, we're sorry about that. We're always working to improve our site. Here's $150 in fee credits. And I'm like, yeah, that's not going to happen. That's not even close to what I lost. So, just be careful. Be careful. And I would say that maybe don't trust, depending on the site, maybe don't trust manual stop losses. Maybe make sure you always have a stop loss in. I mean, it's sad that the crypto world is so far behind that you can't trust a site to work when you need it to work. But, that was a pretty bad loss for me. So I think we'll get another one of these types of candles if we break down under that $9,100 level. But time will tell. I do not expect that we will bounce off of that again, okay? I think it's probably going to fail the next time. And now I remember what I was saying on the weekly while ago. So if we pull up our EMAs, you can actually see that the 12 EMA has actually been support basically over the last month and a half. We just keep testing that line of support, and this was actually the 5th test. The more times you test a line, some people will say it's stronger. I disagree. I think it's like anything else, right? It can only take so much punishment before it collapses. And I think if we come down and test this 12 EMA again, I do think it fails. And I think it's going to flip from support to resistance. So that's an important level. That's right now, it's down around $9,900. So if we fall under that, that could be the initial event that takes us down to 9,500. Of course, that would confirm our head and shoulders, and that could start taking us down further. And then if we break through this line at 9,100, I think that's where all hell breaks loose. And I think that's where it just starts to get really nasty, okay? Because you have to look, I mean, this is one really big M if that all comes to play, okay? So same story with me. I have absolutely no Bitcoin. I say absolutely no Bitcoin. I think I do have some scraps. I probably have like $500 or $1,000 for the Bitcoin if I go look at all the different exchanges where I have like 0.005 and 0.003 and shit like that. But I don't have any like, real Bitcoin that I'm holding as far as like 5 Bitcoin or 10 Bitcoin or anything like that. I just have little scraps that are left over, basically like dust. So I haven't bought any Bitcoin back. I haven't bought any of my Litecoin back. I don't even know what Litecoin's doing. I haven't even looked at it today. I would imagine it's probably not doing very well. I'm just going to go ahead and get rid of all the levels because they just make it really hard to see. So if I look at Litecoin and I look at a daily chart, yeah, this is definitely a head and shoulders. All right, well, when I draw the head and shoulders, it's going to pull all the crap back on there. Essentially, when you zoom in on a 5-minute chart like that, see how it's not all crumpled up? Now you can actually see, okay, here, this line and this line, but when you zoom out, it's a freaking nightmare. But that does look like a head and shoulders to me. And it's funny because I had a troll talk all kinds of shit the other day about one of my head and shoulders patterns, and then I turned around and I saw Peter Brandt actually post a head and shoulders on Twitter. Guy's been trading for like 40 years. So if you have a problem with my head and shoulders, and you want to tell me my technical analysis sucks, you should probably go tell Peter Brandt his sucks too, because he came to the same conclusion that I did. And his target was 40 bucks for Litecoin, right? Where's the top of my gap at? 40 bucks. So pretty sure I've been saying $40 Litecoin for like a month now. And now there's a guy that's been trading for 30 or 40 years who's saying the same thing. So, it doesn't mean it's right. Doesn't mean it's going to happen. But it was nice to get some validation after taking a lot of flack from guys who are fake traders, who have full-time jobs and trade a little bit on the side and think they know technical analysis. It's, a little ridiculous. Bears are not appreciated in cryptocurrency. And that's kind of a sad fact, right? There's so many crypto Kool-Aid drinkers that if you're a bear, people just get pissed off. If you're wrong, they get mad because you're wrong. And if you're right, they get mad because you were right. It's a weird deal. It's a lot of negativity. I've been bearish for the last couple of months, and I've had so many nasty comments and private messages. It's just like, wow. You got to remember that long term, I'm a bull. But short term, I'm just going by what the chart says. And the chart says it's a head and shoulders. Chart says Litecoin's going to 40 bucks. Don't hate me. Don't shoot the messenger, right? It's just what I see. So same thing with Bitcoin, people are getting upset with me because I see Bitcoin going down to 4,400, but that's just what I'm seeing in the chart. Doesn't mean it's going to happen, right? Doesn't mean it's guaranteed. But I've been bearish ever since, we made this top, and I actually did a thing over on TradingView saying that I thought we'd get an A, a B, and a C, and that the B would go up to 13.1. Well, this B actually went up to 13.2, right? And that's all verifiable. I mean, that's what I don't get about people like getting angry. Like, instead of getting angry at me for being bearish, it's like you should probably go back and look at some of my calls, because if people had done their own due diligence and maybe considered that I was right, there was a lot of money they could have made. I mean, look at this crazy stuff. So like, here's some of the ideas that I posted, right? The Litecoin cup on a handle idea had a target of 133. Price was 91 bucks at the time. Actually shot all the way up to 146. So if somebody had entered this trade when I did this chart around 91 bucks, they would have made about a 45% return. This chart here, people didn't like this when I posted it. I was calling for a B leg up at 13.1, right? If they had shorted it at 13.1, like I said, right? It went up to 13.2. They wouldn't have gotten stopped out, and then it dropped all the way down to $9,100. So that would have been like a $4,000 gain per Bitcoin, which was like 30%, right? People didn't like that chart when I posted it. They definitely don't like this chart, right, which is a fractal of 2017. And this is actually one where I actually said I don't expect it to happen. I just think it's one possibility worth keeping an eye on, you know. And you can see so far it's just kind of moving sideways, so hard to say what's going to happen there. Then we've got the 3 peaks in a domed house pattern, right? This one people really hate because it shows it going all the way down to like 5,200, but if you click play, so far so good, right? Posted the chart over here, it's kind of right down on that line. So the only one that was really like just completely wrong was this Litecoin one. And I actually said I was short. It just, you know, the chart didn't seem to agree with me, but I was still short. I'd said that down in the description. If we look, it just completely dumped out of the bottom of it. I think it's more likely that we're probably over in this area over here with Litecoin, right, where this is going to kind of grind down. And again, this target was down around 34 bucks after the distribution phase. So yeah, you know, I was feeling a little burnt out yesterday between the trolls and between the Kraken issue and everything. It was like, man, you know, I started to ask myself why I even do these videos. I don't make anything off these videos. I don't know if people watching these videos realize that. If you ever noticed, there's no ads on my videos. There's no monetization on my videos at all. I literally make nothing off of these videos. I just do these videos because, number one, I really enjoy trading. And number two, because I wish that I had found someone in 2017 who would have talked common sense versus being like uber bullish, right? Because if you look now, like knowing what I know now and having the experience that I have now, if I could go back to 2017, and I don't mean like if I knew what the price was going to do. Like if I didn't know what the price was going to do, just had the trading skills that I have, I would be retired right now. There's no doubt in my mind, right? Even being completely newbie in 2017, I got a 1,400% return before the market crashed. So if I knew then what I know now, yeah, I would have 10x that, right? For example, I'll share something with everybody watching this that you may or may not realize. There's a saying in trading, it's buy the rumor, sell the news, or buy the rumor, sell the event. Well, you know, if you look at what happened in 2017, the top of the market was December 17th, 2017. That was the day that we made the all-time high for Bitcoin. And a lot of people will say that, you know, it was just a coincidence, that, you know, there's no real rhyme or reason why we crashed that day, blah, 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 blah. That's absolutely not true. There is a reason that Bitcoin crashed on December 17th. And anybody who was a trader and understood trading, they knew to get out right there on December 17th. Forget chart patterns, forget technical analysis, forget all that shit. Let me show you something. Okay, well, it's not going to let me view it because I'm actually using a VPN right now. But essentially what happened was CME launched their Bitcoin futures on December 17th, 2017. So when they made the big announcement that they were going to be launching futures, that was a buy the rumor event. And we got this huge pump, right? And as soon as it launched, that was a sell the news or sell the event. So when it launched, people were then dumping, right? Because that's how that works. Buy the rumor, sell the news. And you also had all kinds of people who had absolutely no interest in cryptocurrency, and they thought it was completely overbought. They thought it was a bubble, yada, yada, yada. So they all shorted the shit out of Bitcoin. So between them shorting Bitcoin and between people selling the news, that's what crashed Bitcoin. That's why Bitcoin dumped like this, right? This is a daily chart. So it went from an all-time high on December 17th, 2017, and it dropped within 5 days. It had actually dropped 50%. Right? And if you didn't know trading, and I didn't really know trading that well back then, I had no idea why it was dropping, right? People were saying, oh, it's the Chinese New Year, it's this, it's that, you know. And of course, it was the typical market cycle stuff where it's, oh, this is just a correction. We're going to go, you know, even higher after this. But if you really understood trading, you would have known that this was not a correction, that this was literally the start of a bear market, right? This was people selling the news, selling the event. And you would have been getting out, right? Way up here on December 17th, the day that launched, you would have been selling your coins on the open. And the open that day was $19,650, right? But I didn't see one single person doing a video telling anybody that. Now, I'm sure somebody out there did a video on it and I just didn't see it. But that's why I do these videos. Because I wish, like hell, somebody had saved me, right? Because the reality is I'm just going to talk real numbers and real life here, you know, real talk, so to speak. I lost $203,000 from December of 2017 to December of 2018. I lost $203,000 because I held. That's what it cost me, not knowing. That's what it cost me, not knowing that every one of these dumps was not a correction, but it was actually the opposite. It's the rallies that were corrections. And I should have been selling the rallies and buying the dumps and selling the rallies and buying the dumps. But I didn't know that, right? All I knew is that all the dipshits on Twitter and YouTube were saying that any minute institutional money was going to come in and we were going to go to all-time highs. And I just kept defaulting to their judgment. Again, that's my fault, right, for not learning. It wasn't until about halfway through 2018 that I finally really got serious about learning to trade because of all the money I lost, right? At that point, I had lost over $100,000. So that's, you know, what happened that I learned to trade was I lost a bunch of money. And then I did not have the confidence. Like I did a video in August of last year saying that I thought 3,200 was the bottom, but I didn't have the confidence to trade it. I didn't have the confidence to sell my coins because really shorting support, which is what we were on, shorting support is typically a bad idea. So I can't say that I made a mistake. It didn't work out, right? It did drop. But that's why I do these videos. So, you know, I don't pretend to be an expert. I don't pretend to be perfect. I just try to introduce a little bit of common sense to the market. I try to take away the euphoria and just be a realist and say, okay, this is what it looks like is happening, right? And all through here, this looks like, just take a look at this real quick and then take a look at this and tell me they don't look identical. Tell me they don't look freaking identical, right? Two peaks, little dead cat bounce, little dead cat bounce, higher peak, lower peak, lower peak. Are you seeing it? And this is what came next. Okay? So when I'm sitting over here doing a video saying 5,200, 4,400, a possibility of 1,800, and people are getting all mad, just think about it, right? I know everybody's saying the same shit this year they were saying 2 years ago. Oh, institutional money this and institutional money that. Listen, I'm just going to tell you as a guy that's not an institutional investor, I'm just going to tell you as a guy that's, you know, just a regular retail investor, what they call dumb money. Just going to tell you right now that even as dumb money, I'm not excited about buying a $10,000 Bitcoin, right? I'm not really that excited about buying $7,000 Bitcoin. I'm sort of excited about 4,400 to 5,000, but 1,300 to 1,800, I'd be real excited about that. So just ask yourself where smart money or where institutional money is really going to be most interested in buying Bitcoin at. Again, doesn't guarantee that it's going to happen, but I'm telling you, when you zoom this chart in and you look at a weekly chart, or let's look at a monthly chart, all this looks like is a pump, an A, a B, and a C incoming. That's all that looks like on a monthly chart, right? It is bearish as bearish can be. Look at this, right? Super bearish. So I'm not trying to scare anybody, just pointing out facts. The fact is, this was too much, too fast, and all we did was come up to the 61.8 fib, and now we've been bouncing around the 38 fib. We came up, we slipped above the 50 fib again, and now we're failing. And chances are, next stop is going to be down here, which is right around 7,000. And if we break through that, next stop is going to be down here somewhere. So keep that in mind. All right. Just one possibility. The other possibility, of course, is that we do find support here and that we just go absolutely bonkers. But trading is all about probability, not possibility. And the probability is we are going lower. All right, so with all that being said, please remember I am literally some guy sitting in a spare bedroom. I'm not a professional financial advisor. Nothing in this video is financial advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel if you haven't already. Also, don't forget you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.